Today we're going to take our test about disability income. So the first person who answers is the one who gets the point. If the person gets it wrong, the other participants may try to answer it. Okay, guys. So ready, set, go.
When the person tends to work after.
I think it's B.
Okay, we got Raisa with the point. Let's see.
No, I mean it's A.
You're a premium. Okay. Okay. Here it says, when a person returns to work after a period of total disability, so this means that this is a temporal disability, a short-term disability. And it says that the person cannot earn as much as the person earned before. So it means that she has a residual disability. Residual. Sorry, you got it right at the first.
I said B.
No, you change it to A. Okay. So remember, when you're going to face the test, it's important. This is a long question. It looks confusing, so it's a good idea to break it down in chunks. For example, when a person returns to work, okay, after a period of total disability, okay, you make a pause. Okay, total disability, return to work. Okay, fine, but there's a condition. There's a twist. But cannot earn as much as he or she did before the disability. Okay, there's a situation. The person returned to work but cannot earn as much money as the person used to earn before. So what do we call this person? So remember, first we're going to try to pre-think. So I think that there's like a residual. I think that like something is not working as it should be. The person still has some sort of disability. So let's look at the answer questions. First one is waiver of premium. So waiver of premium doesn't have anything to do with this. Waiver of premium is when the insurance company does allow the insured to not pay the premiums for some reason. So they are waiving their right to collect premiums. So that's not it. B, residual disability. That's exactly what I was pre-thinking. Okay, let's look at C, presumptive disability. So presumptive means that it's something that is, we're thinking that the person might be disabled. So that's not it. But how about D, recurrent disability? Recurrent disability is when someone is disabled for some time. Let's say a person, let's say the person had an issue with the sight, like I don't know, a virus or something neurological, and the person loses like 70 or 80% of the sight. After some treatment, the person recovers some of the sight, but then because of the condition, make it back after a couple of months or years. So that's disability. Okay, guys, understood?
Sure.
Okay.
Okay, awesome. Okay, next one.
I think it's A.
Okay, we have an answer. Let's look at it. A. Normally, which of these statements concerning an individual disability income policy is true? So, if them are false, one is true. Okay. Normally includes the elimination period. Yes, that's correct. Yes.
Elimination
Let's
period.
look at the other ones. We have to elimination period. Yes, that's correct. We're talking about elimination periods. But let's look at the other answers and see why they're false. Benefits that are not taxable. So actually, that's not it, because normally the benefits are tax exempt because the premiums are paid with taxes. So if you pay taxes once, you don't pay taxes later. Age of the insured determines the amount of the benefits. Not really. The age of the insured determines the amount of premium. The older the person, the higher the premium. Maybe some insurance companies can modify benefits that say, if you want lower premium, we can offer you less benefits, but that's normally not the case. Premiums are normally tax deductible. That's not usually the case. Maybe with some group policies that could be the case, but that's for example, Social Security. That's different. So normally this is the better one. Very good. Sebastian got a point. Awesome. Question. Raisa, what is elimination period?
Is the time that you have until get the service.
Yes, correct. That's a time that has to pass until you get the service. So let's say you go to the doctor and you qualify for disability because of an injury or something. There's and you're eligible to receive benefits. And the insurance company says, okay, fine, you're eligible, but we have in your policy an elimination period. Could be 1 month, could be 6 months, could be up to 1 year. So it depends on the disability. For example, let's imagine a person broke a leg, and that's considered a short-term disability because the person eventually will recover and will go back to work. So that's a short-term disability, but there are also elimination periods for that. The elimination periods obviously are much shorter. Could be 10 days, could be 7 days, could be 14 days, depending on the policy. But for long-term disabilities, let's imagine a person was working and there was a big explosion and the person lost the ability to hear, got deaf, unfortunately. So that's a long-term disability, and the person is eligible to receive benefits. But for longer disabilities, the elimination period is 6 months or maybe 1 year, depending on the policy. So the person will have to wait until receiving benefits, and during that elimination period, that person will have to pay for any of the incurring expenses that the person may have. Okay, let's continue.
Recurrent. D.
Recurrent. Okay. Okay. Let's look at this. X, which is the person, owns a disability income. Okay. Policy. Okay. What are this question? Sebastian, what's a disability income policy?
It's a policy that it's made when you suffer an accident or something that you're not able to work as fast you used to do it before.
Yes, exactly. It's like when a person is working normally, because of the disability, the person cannot work and earn as much as the person used to be. So depending on the type of policy, some policies, if it's a life policy, it calculates a percentage of the face value. But if it's an loan, a disability income alone, it could cover up to 100% of the income that you used to receive. Okay. It says here that this person in X suffered a disability which was due to the same cause as a previous disability. So it means for this, I first word I it's in my mind is recurrent because is having recurrent disability. There he says this disabilities both occur in over a 4 month span. So normally a 4 month span is a very short period, a very short. So it means that remember that there's some elimination periods. If it's a concur, it's something that happens very recently. Only one elimination passes. So at the beginning, the person has to wait. But if the disability came again and it was a short span, there's no elimination period, because it's considered a one single disability period where the person is eligible for benefits. Okay, which of the following provisions allow X second disability to be covered without a new elimination period? So we're talking about provisions. Okay, provisions are segments of the contract which have a specific purpose. Okay. Delayed disability. No, well, delayed disability is, for example, when you happen to have an accident or something that causes a disability, but it doesn't occur at the moment, but maybe it develops sometime in the future. For example, if the person, let's say, I don't know, contracted some sort of virus that caused a neurological problem, after a couple of months or even years, the person will start to develop the symptoms that makes that person disabled. For example, unable to walk or some sort of uh, condition. Residual disability is what we discussed in the past. Is when you kind of recover, but not to 100%. You still have some sort of disability. For example, one important case of residual disability that is very common. For example, older women typically have a larger um, percentage of having osteoporosis, so the bones are more brittle. So if, for example, if a woman falls and a senior female falls, typically breaks her hip, and that's pretty bad. And getting the bone back to its place, typically after surgery, after physical therapy, after everything, the person still has a little limp, cannot work normally. So that's a normal case of residual disability. Partial disability is that you can perform but not completely. It's very similar to residual. Recurrent disability is this the case. Here it says the insurer will provide the same benefits without a new elimination period, because the span is very short. It depends on the policy. Okay, guys, we're good.
Yeah, what we call that in Spanish? What we call that disability in Spanish?
Um, well, um, well, we can call um, um, discapacidad. Discapacidad. Yeah. Yeah, discapacidad. Discapacidad recurrente, which means a recurrent disability that happens from time to time.
Very similar to English.
Yeah. We can guess from the words, disabilidad. Also, disabilidad is it's a less common word, but we can use it. Discapacidad. Non-capacity. Okay, guys, let's move on.
A.
Sebastian said, which one did you say?
A.
A.
Yes.
Yes, that's correct. Sebastian got the point. Okay, so here we're with an except question. So with an except question means that three of these are right and one is wrong. So let's read out the question and try to pre-think to guess what is the correct question. So individual disability income. So as we discussed, is someone who will receive a replacement income because of a disability. And it's an applicant. So the person is filling the application form and is looking to be covered. So in the application, the person is required to provide information. Spouse's occupation looks a little odd because what does the spouse occupation have to do with your own risk? Maybe not much. What about gross income? Yes, because depending on your income, depends on the coverage that you may need to be covered. For example, if a person works, I don't know, in an office, let's say in a technology company, the person we can calculate the gross income and know how much the person is capable of earning and how much that person would need a replacement income in case the person gets disabled. Third, medical history. Yes, we need medical history because depends on some pre-existing conditions. Maybe some policies might deny it depending if it's too close. That's we're going to talk about later. It's a look back period. Occupation, yes, it's important. The occupation. Some occupations